Hello folks, welcome to Pro Trader Strategies Market Commentary for Thursday, March the 11th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis, and I'm going to do the same thing in these daily market commentaries, but I'm also going to talk about these option strategies that I'm implementing into my portfolio on any given day based on those assumptions I come up with in my market analysis. Also, I even go further for you folks in webinars where I've streamlined the process for you guys to find the optimal option strategy for any given assumption. Earlier this week, I showed you two bullish assumptions, and they were two completely different option strategies based on that same bullish assumption. Two different underlyings, two different worlds. We have to discern what is the best option strategy for that. And I've, like I said, streamlined that process for you folks out there to find that. Follow along this roadmap to trading options, and we'll streamline that process for you. All right. Without further ado, let's get on with the economic data. Across the pond, really not a whole lot. They did have their monetary policy statement, and they remained unchanged for the ECB. Here in the United States, though, we got some more unemployment data. We got unemployment claims coming in at 712,000, expected to be 730,000. Lower claims, lower people, or lower amounts of people claiming unemployment, which means that it seems like the economy is doing better, but we also have to look at that discouraged worker where people are falling off the unemployment claims list, and that kind of lowers that overall unemployment rate. Also, last month's number revised up by 10,000 less hires, which kind of makes up for that headline number, really. And then we got natural gas storages coming in at 52 billion cubic feet, expected to be a drawdown of 75 billion cubic feet. So bigger drawdown than expected. Not a real surprise here with the cold weather we've been seeing across the United States. So we could easily see that number start really drawing down on those natural gas numbers. All right, let's talk about the markets. We've got the Dow Jones Industrial Average up by 370 points, starting out here with the equities. We've got the E-mini S&Ps up 54. Everybody making some moves. Keep in mind, I think that Dow Jones Industrial Average high, overnight high, was still from the overnight, actually. All right, NASDAQ continuing to move higher. Yesterday, remember I talked about this little topping pattern here, that it was probably not going to make up any type of top, despite the fact of where we might have settled. I thought that that was going to end up looking like a continuation pattern. It is. People coming back into NASDAQ. Now remember, we've been watching this sector rotation out of tech and into some of these blue chips, which is why we're seeing the Dow really outpace, make new all-time highs, and the NASDAQ is now kind of lagging here. More of a reopening trade continuing to go through with, or follow through with that trade. I don't know. I'm struggling today, I guess. All right. Crude oil up $1.50 on the day. We settled above that 9-day simple moving average, so we are continuing that bullish trend here. Again, I would like to see it roll back over into the 50s just for lower prices at the pump for you and I, for the most part. That helps out the economy. And the gold futures are really kind of struggling today, as you can see there. I still have on my GLD. As a matter of fact, they're probably going to go off the board in probably like 8 days or so. Yeah, my long calls in GLD going to be going off in about 8 days. They are not looking very good at all. I would have to have a massive rally, probably up above this Fibonacci here at this point, because of all that theta decay. But it's not really deterring Bitcoin. As you can see here, yesterday we did make another all-time high. Today, very close to that. We're going to have to just keep an eye on that. It doesn't seem like it follows normal chart rules there. And we can see with the E-mini S&Ps unabated to the upside. Economic data was not terrible, folks. I mean, we had the job openings number that I actually may have forgotten to remember. That was higher than expected, almost 7 million job openings for JOLTS. They also revised last month's number up. So all of those numbers looking very good got unemployment claims coming down, job openings going up. That's not that discouraged worker idea that we were talking about there. And we see many S&Ps continuing to make those moves to the upside. All right, I wanted to talk about IBM because if you guys have been following along with this, you guys know that I have gotten long IBM quite a while ago on selling some puts in an earnings cycle. I got put that stock. What have I been doing since then? Lowering overall cost basis by selling covered calls in this trade. And right now I am currently short the 130 calls in there. So you can see that's getting very close to where my short calls are. I'm not concerned about this at all. I'd be happy to have this called away from me at 130, and then I would go in and start selling some puts around the 115 area, or 115 puts, I should say, to start getting that stock, allocated again. Get long the stock, covered calls, called away, sell puts, cash secured puts, try and get that back into my account and continue to play this game with IBM, which has not gone anywhere for the last 20 years for the most part. So this great stock to get involved in. Trading, cash secured puts, covered call strategies, as far as I'm concerned, this is one of the better underlyings to trade. Calls, options, getting your feet wet around this type of idea of trading options around your portfolio. IBM, probably a real, you could write a book about it basically on how to trade options around IBM. It's so easy. All right. So anyway, those short calls hopefully get called away from me in my long stock. I've had that on for a while, lowered the overall cost basis at this point by about $5. So I'm well in positive territory with that IBM trade there. Square, if you guys remember, just on Monday, I played this trade out. So 4 days ago, I sold some puts on the sell-off. Didn't wait for it to get confirmed at that point in time and was in this trade relatively quickly. So I went into the April, sold the 150 puts in there. Remember, we had high implied volatility. It looks relatively low here, but if I kind of draw a line on this, you can see that we got into this when the volatility was high and started coming out. So I have lost probably 5 percentage points in volatility. With the directional move in my favor, we have that move, continuing to move higher since I put that trade on. So I've got directionality, volatility coming out. That's allowed me to get out of this trade in a matter of 4 days. So like I said, sold it for 150. 50% of my max profit should be right around 70. Well, yesterday I was trying to get out of them, but today I got lucky and got out for 60 cents. On this trade. So out of my square, like I said, selling puts, high volatility. That's what we would want to do for a directional assumption that was bullish. And on the flip side, on that same day, we put a trade on that was not high implied volatility for a bullish trade. And that was in UAL. And in UAL, we have gotten that same directional move, as we can see here the last 4 days. Directional move to the upside here in UAL, but it has not done quite as well as what we would see over there in the square trade, where they were both bullish assumptions. One had high implied volatility. This one has low implied volatility. This one leans me towards buying a call. The other one, bullish assumption, high implied volatility, that leads me towards selling options and selling a put for that bullish assumption. Those are the ways that we talk about how to discern what type of option strategy is best suited for a directional assumption. This is a perfect example. And reason why I like selling options is what happened over there in the square trade. Immediately made my money in that trade quickly. With UAL, I've got a little bit further to go before I'm starting to make money on that trade there. So 2 different scenarios, 2 different plays, and one is working out quite nicely, the square trade that I was able to cover. This trade's working out better, but it's going to take a little bit longer to come to fruition on that trade. And that's it. I thought there was one more option, one more thing I was going to talk about, one more thing in my portfolio, but that might have been it with the UAL there. So other than that, pretty much sitting on my hands here, playing around with my portfolio, looking for opportunities in and around the markets, but that's about it. We're going to be talking about how to sell cash secured puts similar to what I did over there in Square. We're also going to be using that as a dollar cost averaging type trade where we could have an underlying in our portfolio and want to add to that. And I'll show you how to do that using options rather than just going out there and putting in a limit market order at some specific level that you found attractive. And we'll talk about those details today. So make sure you sign up for cash secured puts on our roadmap to trading options series. All right. So if you can't take that, take it easy.